Thanks, Shafiq, and good morning, everyone. It's my pleasure to be here. My role today is to talk about spec pharma. I'm going to actually clarify right at the beginning of my presentation what I mean by spec pharma, and then I'm going to talk about the primary business drivers using Maris Labs as an example. And then we'll have a couple of questions, and I'll conclude with my outlook for spec pharma in the near future. So what is spec pharma? Spec pharma is different than specialty pharmaceuticals. Spec pharma is generally a term used in Wall Street and occasionally on Bay Street to differentiate big pharma from smaller companies. These smaller companies have less of an emphasis on R&D and more of an emphasis on business development and M&A. These smaller to mid-size organizations generally buy established products and then either change formulations or provide extra value by using value creation opportunities, which I'll talk about. So this slide doesn't look like it did originally, but here it is, a comparison between R&D and M&A. I think everyone knows there's a different risk profile. R&D is generally higher risk, a lot more uncertainty, but clearly the rewards with success are outstanding. On the M&A front, there's a little bit less risk. You generally have a pretty clear understanding, and I'm talking about buying commercial assets on what you're getting and what you plan to do with those assets that will extract additional value. So they're lower risk. They require different core competencies. Generally, spec pharma companies have operational excellence and business development excellence, whereas big pharma has competencies in all areas, including innovation and R&D. Wow. The slides are looking a little bit different, but I'll try to deal with what I have. I'd like to focus your attention on the pitch. So this is the Maris Labs pitch. We buy underdeveloped pharmaceutical products and then breathe new life into them. And the next 3 slides, I'm going to talk about what we look for, how we do it, and then how we extract additional value. So here's an example of what we look for. We look for prescription drugs. We look for products that cover a certain geographic footprint. We look for predictable cash flow and strong margin, but probably the most important thing we look for is the fact that we can prove these products are underdeveloped and therefore have some value creation opportunities. Here are 3 ways in our business that we focus on in extracting additional value from established products. The first one we talked a lot about is increasing prices, which is one of the value creators. It's got a lot of press in the last couple of months, but when you deal with products in Canada and Europe, I would suggest that it's a lot different market environment than it is in the US. Prices, when you're able to increase them, are generally increased when you have a clear justification, a good business plan, which looks at the variables that the payers in the country looks at. We also occasionally create new demand by starting to promote a product that has not been promoted in quite some time. And the last main value creator in spec pharma is where you reduce costs. You either reduce infrastructure costs, you reduce manufacturing costs, you use a scalable platform that already has fixed costs, and when you add additional products to it, it becomes more profitable. This is one of the most important things that spec pharma companies do. They do M&A. And this is sort of like the idea, the more shots on goal, the more goals you'll score. So here's a schematic which basically represents a little bit about the activity at a company like Maris Labs, where we initiate 300 plus contacts a year, and we sign 40 non-disclosure agreements and we get into 10 due diligences, and at the end of the day, we reach the finish line with 2 to 4 products. This is a theoretical example, but the point of presenting this is that this funnel is what drives success in specialty pharma. You know, how well you do every step of the funnel, and ensuring that you have the appropriate targeting mechanisms, the appropriate due diligence processes in place, so that when you get to the finish line, you know what you're buying, and you know what value creation triggers you can pull. Now, I do have 2 questions. This one is a company that's been in the news quite often. And my question to all of you is, if you were smart enough in 2010 to buy Valiant at its low price, and also smart enough to sell Valiant in 2015 at its high price, what would be your return on your $1,000 investment? Interesting. The right answer is 3. Your $1,000 that you would have invested at a low point in 2010 would have been worth, had you sold it when Valiant stock peaked a few months ago, you would have returned $15,000 on your original $1,000. Since that point in time, Valiant stock has gone down, like the industry, but certainly has been in the news quite a bit. The next example that I have is one we've talked about quite a bit. And really what this is a test to make sure that all of you were awake during the other presentations, because I think the answer was given at least 3 times. So let's see if you guys get it right. I don't want to see anybody getting it wrong. Hopefully we'll have 100% accuracy on the right answer. Let's go. Okay. Whoa, almost 96%. So who was the person that said number 1? Raise your hand. No. Anyways, very good job, everyone. My last slide. I believe the outlook for spec pharma is promising for 2 reasons. Number 1 is that there will be continued consolidation in the industry. That's the sharks eating the smaller sharks. And number 2 is that big pharma is a very complex business. I spent 17 years at Eli Lilly in big pharma, and they're incredibly complex businesses where there's generally a focus on a few key promoted products. And in my estimation, there is an objective of most big pharma companies to continue to streamline their operations, to make their product line more focused and consistent, and there will continue to be divestitures in our business. And I think one piece of good news based on the last 2 months of stock market turmoil in spec pharma is that I believe that the valuation multiples that used to happen in the US will be slightly adjusted now that valuations have come down in many spec pharma companies. So with that, I'd like to conclude my presentation. I hope that you got some value, and I'd like to introduce Wayne to the podium. Thanks very much, everyone.